If you've been holding LUNC through this stretch, you've probably asked yourself the same question thousands of others are typing into Google right now. Will Terra Classic ever rise again? I spend hours pulling verified data from exchanges, burn trackers, and the actual chart to give you a real answer. Not hope, not fear, just the numbers. Let's get into it. As of today, LUNC is trading right around $0.0000550, with a market cap sitting between $310 and $320 million, ranking at roughly 99th by CoinMarketCap. Circulating supply sits at 5.52 trillion tokens out of a 6.46 trillion total. Here's the context that matters. Back in April and May, LUNC staged a genuine 150% rally, driven by a huge Binance Burn event and network upgrade momentum. But that rally has since reversed. Price has fallen over 20% over the past month, erasing a big chunk of those gains. So the honest starting point isn't LUNC is rising or LUNC is dying. It's a coin that just proved it can pump hard and is now sitting in the hangover phase, try to figure out what comes next. And what comes next might already be written on the chart, because right now, LUNC is sitting inside a pattern technical traders wait months to see this clean. Since that May peak near $0.000120, LUNC has been carving out a textbook descending triangle, sometimes called a descending wedge. Lower highs form a falling ceiling. Price right now is sitting almost exactly at the apex, the point where that falling ceiling and flat floor are converging. That's historically the highest tension zone in this pattern, meaning a real directional move, up or down, tends to happen soon after price reaches it. Now let's check the indicators, because I'm not just eyeballing lines. All four major moving averages, the 20-day, 50-day, 100-day, and 200-day EMAs, currently sit above price, which is a bearish signal on paper. But here's the twist. The RSI has been flashing a bullish divergence. Price made a lower low in late June, while RSI itself made a higher low. That's often an early warning that selling pressure is losing strength before bouts. And on the weekly chart, the MACD signal line just crossed slightly above the MACD line, the first constructive weekly momentum signal since early 2026. So we've got bearish moving averages, but a bullish divergence sitting quietly underneath them. That's exactly the kind of setup that traps people picking a side too early. Let's talk about what would actually confirm either direction and the exact price levels to watch. If sellers stay in control, a daily close below the $0.000550 to $0.000558 support zone opens the door to the long-term floor near $0.000500, roughly another 10 to 12% down from here. If buyers step in and reclaim that 200-day EMA around $0.000585, and then push for the 20-day EMA near $0.000647, that's the first real signal of trend reversal, with a 50-day EMA near $0.000680 as the next hurdle after that. Derivatives data adds one more clue. Open interest has dropped over 10% and trading volume has cooled, meaning traders are stepping back rather than aggressively betting either direction. But the long-short ratio still sits above 1.5, meaning more traders are positioned long than short, quiet but not bearish. Beyond the chart, here's what could realistically move this. Binance Burn program just crossed roughly 90 billion tokens cumulative. But remember, that's still under 2% of circulating supply. So burns alone are a slow-moving lever, not a rocket. If either genuinely drives on-chain transaction volume that feeds directly into the burn tax and gives LUNC something it's largely lacked since 2022, actual utility-based demand, not just speculation. On the flip side, macro conditions right now are a real headwind. Bybit's own analysis points to Middle East geopolitical risk and Fed rate hike expectations pressuring risk assets broadly, with a strong US dollar making it harder for low-cap, high-supply tokens like LUNC to catch a bid. Community sentiment remains resilient, but increasingly realistic. Public social sentiment still skews cautiously bullish, but capital outflows from both spot and futures markets in late June signal fading short-term conviction even among active traders. This isn't collapse, it's caution. So will Terra Classic rise again? Based on everything verified here, yes, in the sense that further sharp, burn-in catalyst-driven rallies are entirely plausible, and the current chart setup genuinely supports a bounce attempt from here. But rising back toward anything resembling its old relevance requires juris protocol and real utility to actually deliver, not just more burns. The chart gives you the levels. The fundamentals give you the timeline. Combine them, and you get the real answer, not the hype. Which side are you on? Do you think this bounces off support or breaks down toward that $0.000500 floor?